Oil just hit its lowest level in 5 months, and it's not because of what you think. Most people are blaming weak demand or trade tensions, but behind the scenes, something much bigger is brewing. Today, we're uncovering why oil just crashed, what it means for your portfolio, and whether this is the end of the so-called commodity supercycle. Let's break it down, because if this trend continues, we could be looking at the biggest shift in global commodities since 2008. So, what actually happened? Oil prices tumbled below $70 a barrel after inventories in the US surged, and traders panicked. Add to that fresh tensions between the US and China, and suddenly, demand projections for 2025 look a lot weaker. But that's not the full story, because beneath these headlines lies a data point almost nobody's talking about. See, there's a quiet signal buried in the oil futures market that tells us something very different about where prices go next. Enter something called contango. It's when future oil prices are higher than spot prices. Basically the market saying, we've got too much oil right now, but maybe demand returns later. The last time we saw this, late 2018, right before oil collapsed 40%. So, this isn't just a small dip, it's a flashing red warning signal from the market itself. But here's where it gets really interesting, because what happens next could actually flip the entire energy sector on its head. Falling oil isn't just about cheaper gas, it's about money flow. Investors are rotating out of energy stocks and into industrials and metals. Exxon, Chevron, down. Copper, aluminum, up. This could mark the end of the commodity supercycle narrative we've heard since the post-pandemic boom. And if oil keeps falling, it'll ripple through inflation, currencies, and even geopolitics, especially for oil-dependent countries like Saudi Arabia, Russia, and Nigeria. But before you sell your oil stocks, there's one twist that could completely flip the story. Because whenever oil crashes this hard, OPEC tends to react. We could see emergency production cuts, political pressure, or even coordinated action with Russia. And if that happens, prices could rebound fast. So, is this the end of oil's supercycle? Not yet, but it might just be the start of a new one, with totally different winners. In my next video, I'll show you which 3 commodity sectors could quietly replace oil as the next big opportunity. Hit that subscribe button, you won't want to miss this one.